In this video we are going to study a live trade situation that happened 2 days ago in the Euro-dollar 5-minute chart. There are several interesting observations you can make on this chart. This is also a very good example of pure price action reading, which should be one of the foundations of every serious trading strategy. Without further ado, let's try to analyze this chart considering all the important details. The first thing that grabs the attention of the careful trader in this example is the fact that both upward and downward market vectors from number 1 to number 8 are expanding over time. This expansion happens in terms of volatility. Notice how the market gets more agitated as it gets to the right portion of the chart. This is a natural and irrational phenomenon of the markets, and it has absolutely nothing to do with market manipulation. We have to be careful with the idea of market manipulations because once we learn it, we tend to see it everywhere in the charts, and that's a mistake. The reason for this is a cognitive bias called frequency illusion, which is simply seeing a recently learned piece of information everywhere we go. We have to remember that a lot of times the market behaves normally as well. A good trader is, among other things, the one who can tell the difference between manipulated markets and natural flows. Another obvious element in this chart is the creation of higher highs and higher lows in what I previously called expanding market vectors. Numbers 1, 3, 5 and 7 are clearly higher highs, and numbers 2, 4 and 6 are clearly higher lows. The expectation in this trade idea is that number 8 will also be a higher low that will give rise to a higher high in the near future. That's the underlying assumption of a long trade idea in number 8. Beyond these details I already mentioned, we also have surrounding elements that agree with the main idea of what we have talked about here so far. One good example is the hidden divergence that can be found between lows 4 and 6. That's a subtle indication that this market has indeed more power to the upside. The idea for the long trade you see opened in the chart began to take shape after low number 6. After number 6, when price surpasses the high number 5 and creates high number 7, the buyers are sending a clear message. This message states that low number 6 is a solid market structure. In other words, low number 6 can be used in the future as a place where we can count on the buyers who created it. The logical reason for that is quite simple. The vector between number 6 and number 7 was powerful enough to surpass number 5. All that means is that this might happen again in the near future if the state of this market is not dramatically shifted in one way or another. Observe also that in low number 6 I drew a blue horizontal line to mark the point of ignition of the vector between 6 and 7. That's important because it marks the exact moment where buyers took control of the market and made it rise significantly. Another important detail here is the black sloped line that grabs the lows number 2, 4 and 6. Observe that this line can be drawn just using lows 2 and 4. In other words, it would be able to anticipate lows 6 and 8 as you can see in the chart. Low number 8 is a special place in the chart because all the contextual elements converge to this point. We have the upsloping black line almost intersecting the blue point of ignition. Beyond that, low number 8 is near the solid structure number 6, and that means that if we find a reliable way to trigger a trade, we can use low number 6 as a place to put a stop-loss order. This is a market situation where it's really difficult to make a case for the downside at this point, which is a good thing because we can have more confidence to open the trade. Let's carefully analyze the possibilities of triggering a long trade in number 8. Observe that I drew 3 green arrows around low number 8. The first green arrow points to the candle that touched the black upsloping line that has been working for the last lows in this chart. This more or less intersects the point of ignition as well. If you were a courageous trader, you could simply enter at the touch of this line. However, price action will usually give you more than one chance to get in a trade if you pay close attention. Observe that in the candle highlighted by the first green arrow, the lower tail is quite large. That signals that buyers are indeed in this important level, and that we can probably count on them for a long position. That would be a final confirmation for this trade idea, and after that you could look for other opportunities to enter this market. Notice that right next to the candle marked by the first green arrow and right before the second green arrow, price touches the upsloping black line once again. This was the second chance to get in this trade with an apparently almost perfect precision. In the second arrow, we can see that price touches the point of ignition line, and this is what triggered the long position you see on the chart. Please observe that this was the third chance to get in this market assuming you were able to see these lines on your chart. Observe that the previous candles fall short of the point of ignition by less than a pip, but candle number 8 in the second green arrow touches the point of ignition. There were 3 chances to get in this trade in very precise positions, but there is another chance to get in a less precise position, but it's still obviously valid. The third green arrow points to a candle right next to the fractal candle number 8. You could simply trigger the open of the candle marked by the third green arrow. The problem of this fractal candle is that it's too large, but oftentimes fractal candles will give you a way better entry position than this. This adds up to a total of 4 chances to enter this long trade. The stop-loss order in all of these entry positions should be below low number 6 because that's the solid market structure that we are counting on as a protection device. In other words, if the buyers that created the vector from 6 to 7 will indeed appear again, they will probably not allow price to break low number 6. That's the most logical way of thinking about this stop-loss order. For the target of this trade, another 2 great principles were used, which is the principle of the frequency line and Newton's third law of motion that states that every action has an equal and opposite reaction. Observe that between lows 6 and 8 there is a green line connecting the lower tails in a way that their underlying frequency is obtained. This is very different than simply connecting the extremes. Another green line respecting the same angle generated by the frequency observe in the lows 6 and 8 was drawn around high number 7. Notice once again that the line is not placed in the absolute extreme, but it is drawn to catch the frequency of the upper tails. Here is where Newton's third law of motion comes in to give us a target point. Notice that there is a range between these 2 green lines. That would be our action zone. To draw the reaction zone, all we have to do is to extend this same range equidistantly to the upside. This is Newton's third law being used in price to measure a past action to predict a future reaction. It's not possible to see here, but the third line of our target is in the third green line way up in the chart. Since this green line is slightly upsloping, it will also give us a dynamic target. Let's see how the market develops. Here you can see that our target was hit rather precisely. Observe how frequency lines can be deadly accurate. You can find an introduction to the idea of frequency in the new Market Maker Strategy video course, but the alignment between the principle of frequency and Newton's laws of motion will be fully explored in the next course of the Fractal Flow series. If you enjoyed this video, don't forget to click the like button, subscribe to the channel, and leave your comment below. Don't forget also to check the strategy store if you are interested in learning these techniques in greater detail. Thank you for watching and I hope to see you in the next videos.